As many as 6 banks have raised the interest rates on fixed deposits since December 2023 to meet the robust credit demand that typically accelerates towards the last quarter of the financial year. Meanwhile, industry players believe that since banks have been grappling with tight liquidity conditions lately, fortifying the balance sheet before the end of the quarter was a tough nut to crack without raising deposit rates. While credit offtake has been high, deposit mobilization has been low. According to the latest data from the Reserve Bank of India, bank credit expanded by 15.8% year-on-year until December 15th, while deposit growth was at 13.3%. These figures exclude the impact of the merger between HDFC and HDFC Bank. Further, banks are majorly raising fixed deposit interest rates with tenures of less than a year. Experts think that market participants expect the RBI to start cutting the repo rate by the second half of the current calendar year, at which point the short-term funds raised now would have either matured or will be nearing maturity. Therefore, it only makes sense for banks to try to attract deposits at the shorter end by the next few months to bolster their balance sheets by the end of the quarter. So, all things considered, how long are banks expected to continue raising funds?
Earlier, what used to happen is that when the market rates and the policy rates were lower, a lot of flows was available with the banks. And after the rate hikes and with the pause in the interest rates hikes, the other way of central bank to control inflation and control the credit distribution, they've been kind of giving the liquidity in a deficit mode so that it doesn't fuel the inflation. So till the time we see the inflation being slightly higher or out of the comfort zone of the central bank, so I don't see a very long time liquidity deficit to continue, but it's likely to remain not in surplus but in the neutral or a little deficit mode. So it could be 2-3 months or 5-6 months. Nobody's guess.
Large PSU banks, including the State Bank of India, hiked interest rates for FDs with durations starting from 7 days to less than 1 year. Other major lenders include Union Bank of India, Bank of India, Punjab National Bank, and Kotak Mahindra Bank, which have hiked deposit rates over the last few weeks. While these banks have largely hiked rates on retail term deposits of less than 2 crore rupees by 10 to 75 basis points across various tenures, Bank of Baroda has hiked rates by up to 125 basis points. Bank of India has introduced a super special FD with an interest rate of 7.5% for 175-day deposits ranging from 2 crore to 50 crore rupees. In a bid to scramble short-term funds, banks have also been turning to certificates of deposit, which are short-term debt instruments. Business Standard had reported earlier that commercial banks had raised about 1.2 trillion rupees through CDs in December 2023. This is the first time in the ongoing financial year that CD issuances have surpassed the 1 trillion rupees threshold in a month, according to data from the Clearing Corporation of India. The liquidity deficit in the banking system was reduced sharply between December 27th and January 4 by over 1.4 trillion rupees owing to month-end government expenditures, including salary and pension payouts. However, experts suggest deposit rates are likely to be higher for a long time as long as there is stiff competition for funds amid tight system liquidity.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.